All right, I'm super excited about this panel because we just made sure we knew what we were talking about in the last 10 minutes. So in fintech, you normally have friends that when you don't have the answer, you call. And so these are two of my friends, Terry Angelos and Ben Metz. They're the people that have allowed me to break through barriers in fintech, figure out new things. And so I thought it would be super fun to, they also, run huge groups of people and huge divisions and have been in this space for a really long time. And so I thought it'd be fun, hey, invite some of my friends. When I get stuck, who do I call? I call Ben Metz. So welcome, Ben Metz. I call Terry Angelos. Welcome, Terry Angelos, to the stage. And so now, both of these people I normally can't have a phone call under an hour with. So we're going to do our best to make this in 45 minutes and not 2 hours. But thank you both for being on stage with me. Terry, can you give just like 2 minutes background of what you're up to, and Ben then do the same?
Yeah, sure. We should start with the photos, though. Is this some sort of progression? Like, I'm looking pretty clean cut. Then we go to Wade, and then Ben Metz looks like he's just like mounted, like come down from Everest. And so I'm wondering is this in my future if I hang out with you guys?
It could be, you know.
Well, nice to see everyone, and yeah, great to be up here, Wade. So I first met Wade when I was at Visa. So my background, I have started a number of companies in the e-commerce and fintech space. One company called TrialPay, which Visa ended up investing in and acquiring in 2015. And then our team landed up running the fintech and crypto group at Visa. It's great that Visa is here. Last year we were a sponsor, and I think a number of developers came up and just said, "Why are you here, Visa? Like what are you doing at a developer conference?" And it's great that that's totally changed. And so about 3 months ago, though, I have taken on a CEO role at a company called DriveWealth. DriveWealth is a fintech infrastructure company that enables trading and access to US equities and crypto. So we power companies like Cash App and Revolut and Toss and Chipper Cash. So we'll chat about that, and great to be here.
Awesome. Ben.
Yeah, so CTO at Jack Henry. Background was I did Banno with Wade, and then he left and I stayed. And,
good for you.
Yeah, good for you. So what we've been doing inside Jack Henry, our mission is pretty simple. We're trying to help small community financial institutions punch above their weight. And it's, the options they have to actually come compete are pretty limited. So we built a banking as a service platform, and then identity, API gateway, all that cloud native. After Wade left, we really rebuilt everything and built a digital platform, got it to 8 million users. All of that running across 4 cores that were built in the 80s. So just after cutting my teeth on dealing with all these insanely boutique sort of lead weight systems, Jack Henry decided to let me just go work with the team and rebuild it all from scratch. So we're starting over, building out an entire new core processing layer, so that's what I'm up to. I think it's the largest allocation of engineering resources in the history of the company under one person.
Dang.
Yeah. So we are a boring, sleepy little company in Missouri, but we're going to try to go help community financial institutions. Like the United States is very fortunate to have this ecosystem. There's no other country in the world that has it, and it's like a bedrock of our economy, but it's sort of in the background. And I don't think any of us in the room want a future where in which they don't exist. Perfectly happy to see the development of the fintech ecosystem. Perfectly happy to have large banks. I think it's important to have large banks. I think all this is important, but we just want to make sure that the community financial institution has a good shot. So
That's where I got my loan for Banno.
Yeah. Banno wouldn't be possible. I mean, how many community financial institutions were you working with when, at the end? It was like 3?
300.
Yeah.
Yeah.
No, I just mean like that helped us get to where we were.
Oh yeah, 3 banks that
Yeah.
never should have given a loan to a 27-year-old.
Yeah. Yeah, not everybody has access to the VC ecosystem, you know. And there's a lot of 100 million ARR companies that get built in middle America. So, yeah.
Awesome. Well, I'm Wade. I've been hanging around in the financial services world for too long. I'm not Terry's level of experience, but so got to build Banno with Ben here, got to build BillGo with Dan Holt and some of the friends up in Fort Collins, and now having a fun time building Moov. So with a side project called Fintech DevCon. So we thought it would be interesting, a lot of fintechs in this room, a lot of different financial institutions in this room. We thought it'd be kind of fun to just chat about some of the progressions and challenges of when it goes from, 100 users or 50 customers to when it gets really big. And all of a sudden the OCC has permanent seats in your building. All of a sudden nation states are attacking you on a second-by-second basis. And so we came up with a handful of fun questions that hopefully give some insights into things that you get to think about as you scale your organization. So maybe start with Terry. We were chatting a little bit last night about just kind of the scale of decision making at Visa and what being at these big numbers means when you just change a little bit of fraud levers and decision making and what can happen in a massive organization like Visa. I don't know if you want to share that story or.
Yeah, so I think when you get to the scale of Visa, I mean, you're touching pretty much every part of the e-commerce and commerce ecosystem, right? Right from the sort of very top where, if there's a war in some part of the world, like, is the Visa network on or off, right? This is what happened with Crimea and later with Russia. And those are sort of super complicated decisions that get made in conjunction with governments, et cetera. And you can think of payment networks today in some ways as so important and powerful that they're kind of tools of US foreign policy, all right? So, probably the same for Google and other kind of infrastructure companies. If US Congress says you can no longer serve this region, it's hard for that country to then, have a sort of counter AWS or payment network. But I think for me personally, when I was at Visa, one of our jobs was, hey, how do we work with this fintech ecosystem? And we saw all of this innovation happening. We're obviously at scale, but a lot of times customers would come to us and sort of unable to onboard. And one of the requirements that we have, and Wade knows this and others do, is, well, you have to have some collateral if you're an issuer, if you issue a card, or if you're a acquirer. Because every single time you present that Visa at a point of sale, Visa is standing behind that transaction, right? If Wade doesn't pay his bill, then the bank that issued the card will stand in. But if that bank goes bankrupt, Visa has to stand in. And so, Visa does about $100 billion a day in gross settlement. And so I would have thought, okay, surely we have probably about 100 banks around the world go bankrupt. We must have some credit losses, right? There must be some point where Visa has stepped in and actually had to, out of our own pocket, guarantee those transactions. And I started digging around, and I started asking a whole bunch of people, well, what do you think our annual losses are? And everyone would have thought it's some sort of basis points on the $12.5 trillion that we process.
12.5 trillion?
12.5 trillion, yeah.
It's more than $1 billion, right?
Yeah, that is a big number.
Yeah.
And it turned out it was like virtually zero. Like over a 20-year period, we'd lost a couple $1 million. And so if you think about that, like that's a lot of screws that are tight on a very sort of dynamic ecosystem. And one of the nice things about being at scale is we went to the CEO and we just said, what if we just budget for $50 million a year in losses a year in each region? And he's like, that sounds reasonable. And we just sent out a memo to all the credit settlement risk folks and said, just budget for, something in this region. And all of a sudden, all of those collateral requirements were relaxed, still in a very kind of controlled way. I still think the losses are basically zero. But it's just an example of what you can do at scale, and also some learnings. Like it took Visa, MasterCard like 50 years to learn, like you should probably have collateral because banks and acquirers go bankrupt all the time.
That's fascinating. We talk a lot at Moov of, is this a stage-appropriate decision?
Yeah.
And it's, revisiting some of those stage-appropriate decisions as you scale so that they don't inhibit your growth when, your balance sheet at Visa probably can cover $50 million of losses versus who knows when that policy was written initially.
And actually, the most dangerous part is the part that you're familiar with is on the acquiring side, right? Because you're collecting funds from consumers, but maybe there's some problem with that acquirer, and if they go bankrupt, you've got a real problem. So that's the most dangerous part of the whole ecosystem.
Awesome. Ben, one of the things that always fascinates me when we chat is the amount of people trying to get into your system. And it's always like an order of magnitude bigger than I think about on like, you'll say a number and then there'll be something like per second. I'll be like, oh, there's like 1,500 people trying to get into our system per second. And you're like, what? Or different malware that's designed to get into these community banks and fully authenticated people. Maybe as, I think you wrote the first line of Banno, which was a product name, which most of my things are frantically redone in the last second, but before we did Finovate, that's a pretty long journey from the first line of code to millions of users. What are some things you've learned as you've really scaled this thing?
Oh man, that's a big question. Well, we started by building screen scrapers because we couldn't get FIS and Fiserv or Jack Henry to call us back.
I'm still waiting on the Fiserv call, but.
And Jack Henry certainly is probably the nicest one to work with. I'm not just saying that because I work there, but I still give them a tough time internally. We're trying to make it a lot easier for developers to work. I think we're actually the first one. If you go to jackhenry.dev, you can actually work in our entire stack right now, like in 10 minutes as a developer. But that took me, 8 years to get done inside the company. And we have regulators on site right now. I'm getting like updates by the minute. How many here deal with federal regulators directly? How many? Okay, cool. So I'm with regulators probably every 6 to 9 months. There's never really a day at Jack Henry where there isn't regulators. So like that's the first wall we're up against pretty much every day in anything we're doing. And we're running these workloads in the public cloud, which they don't understand. They don't understand anything about modern DevOps. They don't understand. I mean, we had to explain. I think one of my first meetings with regulators, I really had to explain like how things like man-in-the-middle attacks work and stuff like that. Now they're getting a lot smarter, but like that's the challenge we're always up against in scaling our systems. This is recorded, right? I got to think hard about what I'm going to say.
No,
I'm notorious for saying the wrong things. But anyway. So back to your question, we started by building screen scrapers, and then once we were acquired, we started integrating directly to core systems, and then so we built this big internet layer, in the public cloud that connects to all this stuff. And then really what we've experienced the last couple of years shouldn't be any shocker to anybody here, but credential stuffing attacks just ramped. So the compromise of credentials in the US banking system is unbelievable. So things like the Experian breach, other systems that are relatively public. So we went from seeing a couple attacks a month to, I think, I don't know what current stats are, but it's roughly, we stop about, 2,000 or more fraudulent logins per second. We're just doing that ourselves. Also working with some other platforms like MasterCard to help. We see some of our smallest institutions, a very small credit union in Michigan actually had an attack that was bigger than the attack that hit Wells Fargo. The only reason I have visibility on that is because we have some people from Wells Fargo at Jack Henry. So yeah, we have a big job of trying to help protect community financial institutions and give them the tools, because they don't have the tools or the access a lot of times to go deal with these things. And then things like fully authenticated distributed attacks that are coming from validated devices pointed at your login endpoint, at scale, like those kinds of weird things. And I'm sitting there.
So those are actually truly authenticated, multi-factor, trying to get in.
Yeah, and I skipped over the critical point there is social engineering. So, it's credential stuffing combined with social engineering, and the challenge we face is just like the way I always describe it is, I love my mom. She's 72 years old, but she doesn't really understand why that code comes to her phone and why somebody's calling her for it. And that just happens every week, all the time. Just constant, constant. So, yeah, in terms of how we've scaled, I would say our biggest challenge has just been working through the regulatory processes, educating regulators, and then, and then making sure that we are being as aggressive as we can up against sort of that wall of pushback, if that makes sense. So.
Ben, I have a question for you on this. From a Visa approach, you sort of have these like 2,000 community banks in the U.S., and they're effectively run by operating systems like Jack Henry, which is kind of weird. Like a bank almost has no tech. They're kind of a license and a branch sitting on this OS. Is it more secure to have that OS running across the 2,000? Or is it, or is there a case that there should be more of these kind of OSs, right? You get the benefit of being across everyone, I guess. You're also kind of a single point of failure, and I'm just curious how you think about that.
Man, that's a big question. Well, yeah, you're right. Basically, the thing about core systems is that they are monolithic, generally run on something like an AS400. And they can run a bank end to end, but they were designed in the 80s. Okay, so
Pre-internet.
Yeah, one of the things I always remind our engineers is you can't be mad because this stuff was built before the internet existed, and everybody was building this stuff didn't know the internet was going to exist. And then the other thing is that the fundamental design of the system is for a teller experience. So the UX is actually a teller UX. Everything about these systems was designed for that. And they were not designed to scale beyond 8 to 5 on weekdays and 8 to noon on Saturdays.
Aren't those the Moov working hours?
Yeah, never mind.
So your question
We're not a four-day work week company.
Okay.
Just days that end in Y, Terry.
No doubt. I have no comment for that either. So yeah, your question is a good one because, for us, we do run a network because we host. So in the case of your question, we actually 60% of these iSeries boxes we run for the banks or credit union. About 60%. About 40 of them are on-prem. 40% on-prem. That's going to pretty much change drastically over the next few years, say 5 to 7 years. We don't think very many financial institutions will be running their own stuff sort of in-house anymore. It just doesn't make sense. So we're going to do it for them, and then we're going to move it all to public cloud. That's the ultimate answer to your question. There's a lot of details in between. There's a lot of devils in those details. as regulators learn to understand the public cloud, they're going to prefer it. Because if you're doing DevOps, DevSecOps correctly, you can eliminate human interaction with machines. So we always say, just shoot the thing in the head, right? So shoot it in the head. If you have a shoot it in the head sort of DevOps, DevSecOps, and then if you're really thoughtful about how you build your continuous deployment pipelines, if you're really careful and thoughtful about how you build data sets off of your SDLCs, et cetera, then you can be compliant out of the box. You really can. And then as regulators, I remember sitting down with the federal regulators, we were in the cloud and they were telling us to get out. This is a few years back, and I just said, why are you here? Why are you talking to me? And
but they enjoyed that.
They were just like, what? And I'm like, are you here because of the software and the computers, or are you here because of the humans? And they're like, obviously the humans, right? And I'm like, yeah, right. What we're trying to do is eliminate the human interaction with machines. And the public cloud makes that available for fintech. And if you're doing all that, really in a disciplined manner, the regulators, as they learn this, are going to prefer it. And then I actually believe we can get the entirety of the US banking system, say over the next 5 to 7 to 10 years, into a much more secure environment. Hesitating to say this in public, but Google can survive a nation state attack. One of our financial institutions probably can't. Visa can probably survive it, or defend it. One of our institutions probably can't. So we have to get there.
Very cool. Terry, new job. I know you've been there a whopping 3 months, so I'm sure you have everything dialed in and figured out
That's right.
going on. Saw that you were just in Brazil. What type of challenges coming in as a new CEO? It's already a big company, huge customers. Now how do you scale it even bigger, and what are you seeing in order to pull that off?
Yeah, so I can certainly confirm that working at a large global company like Visa and then going back into the CEO seat, there's definitely a change of pace. I think this topic is about scaling. One of the things about Drive Wealth, we're already sort of at scale in the sense that we have about 100 fintechs around the world who use the platform. And we're both the technology interface, we're the API, but we're also the regulated means by which those end customers are purchasing a security. They're buying $1 of Apple stock. I think one of the challenges that we have is, and you see this in fintech, we saw it at Visa, is when you power like the world's largest fintechs, they have a habit of growing very quickly. So
isn't that good?
It's great, right? This is what you want. But if you go back to kind of Drive Wealth, kind of pre my time, there was this period in 21 when meme stock traders, of which some came through Cash App or Revolut, really wanted to buy certain securities. And you need to have everything lined up because you are the counterparty to billions of dollars. Some companies didn't meet that test, some companies did. So those are the kinds of really fun, interesting challenges. We have a client in South Korea, a company called TOS. They have about 21 million customers, like the largest financial app in South Korea. And they turned on fractional US investing through Drive Wealth, and in 6 months became one of the largest brokers in that country from zero. Wow. And so you have these like events where your customers, they sort of like test your API, like is it working? And then like 6 months later, they're one of the largest brokers like in that country. And so you have to be ready for that, both from a technology standpoint, and you always are learning, right? There's like you're never at perfect scale. You're like, wow, we thought we knew what we were doing there, but there's a bottleneck over here that we have to figure out. And you have to be ready from a regulator standpoint, because when that volume comes, like literally every single trade that we do, within a couple of seconds, we have to report that to the regulators, who, by the way, in our industry, are still learning how to deal with a fractional share, right? So like we have fractional shares. You can buy $1 of Berkshire Hathaway, which is a $400,000 stock. And so, our regulator has to, they tend to round that up. And so we have like all sorts of interesting, fun things to do at scale. But it's great, and it's a fun role. And the best part about it for me is if you look at what's happened in the last kind of 10 years in fintech, we probably brought on about 1 billion people into digital consumer apps, whether that's 60 million people at Nubank, or however many 100 million people around the world in various neobanks, or wallets like Grab and M-Pesa. And every one of those individuals is KYC'd, access to a bank account, and virtually all those consumer finance apps are saying, let's add an investment button. Let's let somebody buy into the US economy. So that's the challenge ahead. We have tens of millions of end customers today, just like Jack Henry. We're sort of a behind the scenes brand, so we count that as the end consumers of our partners. And we'd like to service 1 billion people. And that's our goal.
Very cool.
Amazing.
No, it's funny, with this guy, Ben Horowitz, that's on my cap table. He always likes the hockey stick to be a little bit steeper than any number I would ever put in there. But it's fascinating, we all want that hockey stick, but when the large numbers get real large, the complexity, it's one thing going from $1 million to $1 billion. It's another thing going from $1 billion to $10 billion. And I think as humans, you mentally think very linearly, and growing your teams and growing the complexity of your organization, and then you have this other curve that overlays that. And from a cultural standpoint, from an engineering standpoint, from a growth standpoint, you never really line up how you're going to grow that organization along the hockey stick curve, because we as humans don't handle the hockey stick very well.
Yeah, I think the way we think about it is you can plan for 2x. You're like, all right, how are you going to double this thing? But at 10x, you have to rethink the thing, right? And that's like once you hit the order of magnitude, or 100x, you're like, well, it's not going to work that way. Like, we will have to do something different. And then, humans are pretty, clever, and we figure out a way. And often you do something totally different. You're like, oh, no, we don't need that thing at all. We just need this one element. And so that's going to be the 100x high performance thing that we'll manage, and everything else we'll kind of do a different way. And that forces you to do that. I'm sure you've seen that with some of your customers.
Yeah, it's fascinating. And then there's all the dependencies, right? So I'm sure those customers are wanting to make that hockey stick, and they may not let you know about how excited they are to spend Google AdWords and everything else, and you get to react. We have a great partner in Soups over here, and we were just walking back from dinner last night, and I was like, oh, by the way, at any time we may bring on 40 million users. And he's like, oh, would have been good to know, that was about to happen. And so it was really interesting how my organization has been really focused on kind of this big conversion of a large customer. But there was no part of me that, thought, oh, maybe I should share with some of my critical vendors that we're about to add a couple more users to the platform. So anyways, you'll have a day now, not 2 hours, so we're good.
Yeah, I think one of the big observations we had in our Visa approach was, certainly in fintech, I don't think you have a business if you don't support the whales, because you have these outsized winners. Right? You have Cash App and PayPal, and in every region there's a large neobank, and they tend to grow very, very quickly. So you have to manage them. But you also have to have this ability to be the default for all of the up-and-coming companies, because one of those companies is going to grow very, very quickly. And so you have to place both efforts into managing your whales, which you can see and you can measure, but also having a process by which you're constantly trying to figure out, like, how can I be default for every tiny little company? Because eventually the next whale is going to come from those tiny companies. And that's a kind of a hard thing to do. You have to have a fully automated, simple onboarding mechanism for a small company, 10-person startup. And you have to be able to be servicing the largest companies. And that's been one of the big challenges. I think you have to do both in fintech. If you only focus on one side or the other, your competitor who's just focusing on startups, eventually they'll find an Airbnb or a Cash App or whatever, and that competitor now is servicing one of the largest sort of companies in the space. And that's a hard thing to do at scale.
Yeah. Bill Reddy used to say, when he was at iPay, which was acquired by Jack Henry, and now obviously he's the CEO of Pinterest, you got to feed the baby whales because they become whales.
That is true.
Yeah.
Ben, what should I be asking you that's not going to get you in trouble or borderline in trouble here?
I don't know. I mean, our scaling challenges at Jack Henry are just different because we're a legacy company. We have a lot of legacy software. We really have like everything that was built from the 80s all the way to something built last year and everything in between. And so I think I spent a lot of time thinking about Conway's Law, which is the design of any system is going to mirror the design of an organization. And that is utterly, strictly true in Jack Henry's case. And so what we're going through is just a total organizational overhaul. So
even got a new logo. We didn't update it.
Yeah,
it looks good.
Oh, thanks. So it's just like, you heard Yolanda yesterday talk about transformation, and we were having a side conversation, her and I, and transformation is just utterly, completely painful if you're actually doing it. So Jack Henry's just in a ginormous pain cave right now, honestly. We're going through this just huge overhaul organizationally, and we're pushing as hard and as fast as we can. And so then that creates weird sort of scaling challenges, for us. Now personally, I think it was roughly, what were we at when maybe 50 people sold to Jack Henry?
Yeah.
So I have a lot more than that now. And so I've learned to scale all of that. And I also, I'm a little bit weird inside the company. I run a line of business. So I have a P&L, and then I'm also the CTO. So I'm in the corporate office. I get to go through both corporate exams. And so so there's a lot of just me learning how to deal with a lot of that kind of, those scale points. Publicly traded company, all those things make things very different. But internally, we're trying to make sure we get the organizational structures right so then we can get the software right.
Do you have consultants yet?
I hate consultants. So there's the one that got me in trouble. I've been working with Google a bunch lately, and they wanted to bring Accenture in. I'm like, please don't. I mean, they have their place. I'm not interested in talking to them. My trouble, like, they have their place, and we'll do some work with some consultants here and there. Boy, I'm really gonna have to be careful now. My problem with consulting in that kind of situation for overhauling an organization is they don't have skin in the game.
Preach.
So you don't have skin in the game. What we're gonna go try to do here is bloody hard. And it's painful for everybody involved. And so I think we're really fortunate to have Greg Adelson, who's our Chief Operating Officer. He's really leading all that. And when you have a leader like Greg, then, I feel like you don't need, again, no, I think Accenture's great. So for the record, for the public record, may the record show that I think they have,
Are they good people? God bless their heart.
Yeah,
That's a famous Ben Metz line, by the way. They're good people, God bless their heart. They just don't know how to help.
Well, this gets into this morning's presentation was really good too, just about people on the ground that understand these systems that are working on the ground that have skin in the game are the ones that actually build things and change things. And we did an engagement, I won't name who, to look at how we would get to a new core system. And but you're like somebody like myself and some other folks on our team, like we've been in this thing for more than a decade. We just, no offense to them, but we just knew like 10x more than they did, than the people they brought in to look at it. It's just like, okay, yeah, we know what to do. Sorry.
So wait, did we get to ask you some questions?
Uh-oh.
All right, so we've got like 5 minutes left here. Scaling FinTech DevCon.
Yeah.
And this is kind of a special event. It's kind of intimate. People know each other. Are you going to scale it? How are you going to scale it? What's the metric for you for this event? For next year's Fireside Chat.
Yeah,
I'm
absolutely.
myself too.
So I think Jared said last year was the Wade Arnold family reunion of fintech people and financial services. And, that was neat, but that wasn't a well-run conference. Like it was literally just half the people were people I knew and begged and shamed them in order to come here. But how do you start? How do you seed a net new conference? And I think those of us that are in kind of biz dev and partnership roles, there's a fintech thing every week. So how do you kind of break through that if you're going to do something new and unique? And so I think the ethos, though, of staying true to this simple fact, I want it to be a conference that I would use my continuing education stipend for. Like that mindset that the content that's here is something that somebody doesn't go to Java 1 because they can learn more at FinTech DevCon, was what I wanted to create. And I think we've done that again this year. And so if we stay true to those ethos of this isn't a biz dev conference, this isn't a sales conference, but this is something that I'm not going to go to Strange Loop. I'm not going to go to all these, very kind of language-focused language-focused conferences. But I want to come to FinTech DevCon because I can learn and grow. Then we can keep on making this thing bigger. There are some economics to this. This costs $1 million. And, sorry, I just had a Matt Harris quote in my head. You're doing what? So it's okay. It's a seed round company. Thanks, Matt. But it's just $1 million, and the incremental cost is food and so if you can offset that $1 million and add 200-300 more people next year, and I'm not sure if anyone noticed the ticket prices, but this year it would be like raw costs like $550 a person. That's what it costs, and we charged, early bird was not much more than that. And so being able to grow it just a little bit more, keep the intimacy, I think that's really important. Seeing the ecosystem develop around the conference. I think there was 7 events last night that I didn't pay for. Yay! So, there's that to me is what it's about. And I do think there's a risk. I was in the friends and family of Anil for the first Money 2020 with Bano. And he's like, hey, I need you to get a booth. I need you to come here. I need you to speak at like 3 different things. And you're on a panel, you're talking about digital banking, and I need you someplace else because somebody canceled. But it felt very similar the first year of Money 2020 to what this looks like. And so that would be my goal.
Well, it's working. I've learned a bunch in the last 24 hours.
Awesome.
Just a lot of really cool people here building a lot of really cool stuff. Like, I think this is going to be a big deal. I think what you're doing here is a big deal.
Appreciate it.
For what my opinion's worth.
A lot to me.
Yeah. What's so cool is that the domain-specific knowledge that you can, I mean, I was deep last night for like an hour, you know, on like how you actually build some of these ledger-oriented systems and the problems that you're facing. So, you know, it's pretty cool what's happening here.
Great. Well, we're at time. Thank you both for being my friends, being my friend. Thank you both for coming here and being on stage. I know CEO and CTO are probably have some other things in your inbox going on. Give these two a big round of applause for sharing with us today.